the whole 45 minutes. Thanks so much. And I don't have a podium, so forgive me for my computer here. So for many years, the financial industry has basically been involved bank tellers and electronic exchange. I was actually a bank teller when I was in college, so I got really good at counting money fast. But now we almost never see bank tellers anymore, unless you happen to be going through a drive-thru and hoping that your dog gets a dog biscuit, which is how I see them. So we have finance companies who are adopting bots. We have other AI technologies hoping to attract the millennial consumer while not distancing themselves from the baby boomers, who might be a little freaked out by, for instance, a Hopper bunny who is booking their travel for them, if you were at the showcases. In Canada, ATB became the first financial institution to offer banking through Facebook Messenger. And Finn.ai's proof of concept project with ATB has been developed to let customers check their balance and latest transactions in Facebook Messenger. Other financial institutions that are doing that, like Capital One, have been offering AI as well. I brought together this panel to talk about ways that we are customer engaging with AI. First of all, we have Massimo Mascaro. He is from Intuit, and he is, I'm sorry, I'm going to scroll. I'll just...
Director of Data Science over there.
Thank you, Director of Data Science. We also have Dion Lisle. He is the head of FinTech for CapGemini. We have Dan Stern from ATB and Canada. And Dan, your title is, I'm sorry about that.
I'm the Director of Innovation Delivery.
And very innovative it is, as you were showing me, and you're going to talk about in a minute. And finally, we have Jake Tyler from Finn.ai. Jake, I'm going to have everybody kind of give an elevator speech talking about what it is you do. I'm going to start with you. Give me a little bit of a roundup about what Finn.ai is doing with AI and banking.
Thanks. So
It was on.
it's on. All right.
Yeah, it's good.
I'm Jake. I'm one of the co-founders and the CEO of Finn.ai. We're a personal banking and financial management assistant powered by AI. We're a white label only platform. The platform is built from the ground up for banks. We work with people like ATB Financial to help them connect with customers in places like Facebook Messenger and Google Assistant and other channels to help them converse with customers and to help them build a personal banker for every one of their customers. So we look forward to sharing a bit more on what we've been working on in the next 45 minutes.
Wonderful. And Dan, can you tell us a little bit about some of the cool things that ATB is doing?
Oh my goodness gracious. I think I have the most exciting job on the whole wide world. So we do a lot of work in the bot space. We came out with Facebook banking on Facebook. We do money movement now and authentication. We're extending that to voice-based platforms. We have Pepper the robot. I don't know if anybody has seen Pepper. So we have a couple of Pepper the robots that we're testing out. Biometrics solutions. We have a really freaky one that can tell you your emotions. That one's quite kind of thrilling.
How does that have to do with banking?
It helps us identify when customers are not happy, but they're not telling us. It all comes back to the customer experience and making sure that we're listening to what they're telling us.
Wonderful. And Pepper the robot is an actual robot.
If you haven't seen Pepper the robot, take a look. She's an actual robot. She's about 4 feet high. Comes from SoftBank. Amazingly wonderful, terrific person that, believe it or not, millennials don't like to talk to. We found that baby boomers love talking to Pepper the robot.
Must be those lost, what are the Lost in Space repeats that they were watching. Wonderful. Thank you, Dan. And Dion, tell me a little bit about CapGemini and what you do there.
So it's a new group that I started in September. It's the FinTech Business Unit, and basically our goal is to bridge the gap between the FinTech ecosystem, VCs, startups, et cetera, universities, and our largest bank clients. So I often refer to myself as the Rosetta Stone between these two disparate worlds because banks don't always know how to innovate or how they want to innovate. FinTechs don't know how to deal with all the bank bureaucracy, so we try to be the go-between between those two worlds.
Wonderful. And Massimo, how about you? Tell me a little bit about what you're doing at Intuit.
So I own the data science team for the entire company, and what we do is that we apply data science across all our suite of products. you may know actually Intuit from TurboTax or QuickBooks. Those are our two flagship products. Interestingly, applying machine learning to financial things for consumers or small business is extremely exciting because we have a ton of data and we can actually understand both the financial behaviors of people in a very kind of complex way and help them in many ways, from personalization to accuracy correction. We allow actually them to complete taxes much faster. We automatically import documents. You name it. We have pretty much applications of almost any sector of machine learning into our products right now, from computer vision to speech processing, chatbots, and in general kind of relational inference.
Wonderful. Thank you, Massimo.
Sure.
Now, I'm going to put you on the spot right away because you're not a bank. And my question is, why are banks so terrible about financial technological innovation? What's going on there?
So, first of all, I don't necessarily agree with the statement. I think actually banks have to solve a very complex problem. It's not just about applying machine learning or AI to a problem. You have to apply it right. And just like, for example, I like to make the example of autonomous cars, where you can't just kind of throw an AI algorithms and say, hey, like this is actually 98% accurate and will work, right? Because you're going to kill 2% of the population. And so banks actually are in a positions where they have to deal with a problem that is very kind of touching to people and have to get it right. That said, I do believe that there is also another part that is compliance. It's very hard to do data science and AI in conjunction with compliance, and working a lot in the tax environment, I know that very well, and things actually are maturing. So in a sense, I think actually it's an unfair comparison to just compare what's, for example, is happening in computer vision or speech processing with what banks or financial institutions have to do. That said, things are moving very fast in my opinion, and the technology is coming on board.
I would agree. And Dion, I was actually going to put you on the spot next. What do you think? You've thought about this a lot.
I was at Citibank Growth Ventures Innovation. I was at First Data Ventures, and I'm going to slightly disagree. I think banks are horrible at innovation. They're awful. The reason they're awful is because of the installed base. There's a great joke in Silicon Valley, which is, how could God build the world in 7 days? He had no installed base. That's what makes it easy. Banks have a giant base of customers. It's hard to get them all to move at the same time, so you get this long tail effect of a customer says, oh, I don't want to go to mobile. I want to go to a branch. Okay, well, I have to keep branches open. I have to keep them modern and cost effective. So I think what you're seeing is, and the reason I'm excited about people like Finn.ai and others is because now what we can do is really take the large installed base of a bank with the neat technology of a fintech and hopefully meld those two. I also do agree that compliance can be a hindrance, but I do meet a lot of bankers who use it as an excuse. And having been on both sides of the coin, I've been in fintech startups and I've been in the biggest bank in the world. Yeah, it's hard, but it's doable. And I think banks have to expect more of themselves and get more agile and figure out ways to move faster.
Well said, Dion. Now, Jake, I'm going to go to you before putting the actual banker on the spot here. Jake, what are your thoughts on this? You have a really unique perspective on why banks are kind of terrible. That's what I agree with Dion. I think they're terrible.
So I agree that banks are good at some things, and startups like us are more agile, more narrowly focused on a smaller set of things, and can be really good at just that. So I think there's a nice synergy between people like us and people like Dan and other banks, where we can come together and bring both of the areas where we have core strengths and help to move this along for consumers. So that's why we only work with banks rather than being a consumer company. We think if you want to, what banks do have is a lot of customers, a lot of trust, a lot of core regulation and compliance pieces put together and infrastructure built around that are very difficult to replicate. That said, we can do some things that are structurally hard and challenging for them. So we're looking for opportunities to blend the two, and that's why we work only with banks.
Well said, Jake. Thanks. Dan, it is your turn. You said you had the best job in the world. Talk to us about financial innovation in banks.
Well, do you want to know why banks don't innovate fast?
Ooh, tell me.
Who here loves their bank? Well, me
Two?
too. Who here feels like they have to use a bank? And that's why banks don't have to innovate. Because up to this point, we have a captive market and we can set our profits. Fantastic. There's been no competition, there's been no need to grow, there's been no need to optimize. We're sitting in a huge bubble with a lot of money. There's up and coming competitors coming along, both in the tech space and non-tech space. I mean, the common number thrown out is Starbucks has $1.2 billion on deposit. That's $1.2 billion that's not sitting in my bank. That's sitting somewhere else that they can use. We're now being pushed into a place where we have to learn how to be innovative, but we've never done it before.
Well said. And I think 1.2 billion, isn't that bigger than the gross national product of Liechtenstein?
It could be close. It's a really scary number. There's been rumors that I heard that Starbucks is looking at starting their own financing now. When you open up a Starbucks store, you'll go to Starbucks and get your financing to open up your Starbucks store. Again, money coming out of banks.
Mind blown. For a second, I thought you were going to have to finance a Trenta coffee. So talk to me a little bit about APIs. APIs aren't experts. Where do you take the balance the security that you have with your banker while trusting your client data to an API or to an AI? Dion, let's start with you on that one. What are you thinking?
So it's an interesting question, and I'll tell you why. We have a framework that we work with a lot of banks on. For anyone who's worked in Europe, there's a thing called PSD2. It's really a compliance issue that forces open banking. So in Europe, much like we have number portability on our phones, like you can just transfer easily, PSD2 is an initiative in Europe that drives that. So we're early in the API journey because we saw this in Europe as a European-based company. And basically it allows banks to be open. To your point, you still have to be secure. And so we've worked with a number of US banks who recognize that PSD2 is not required here, but the open banking initiative will come here no matter what. So a lot of our bank clients are actually engaging us with PSD2, which is a very European compliance requirement. But what it does is it gives you the framework and the security and the methodology to deliver APIs in a way that you don't just blast out your customer data, or some small fintech doesn't use the API to access PII, personally protected information, and so on and so forth. So we've actually had really good success working with banks to really help them open up.
Well said. Thank you. And Dan, do you want to go next? You look like you had an answer.
Sure. We really haven't had a lot of problem both creating and utilizing APIs. It comes down to the trust with your partner. Any fintech that we partner with, we have a test system that doesn't really have anything in it. Go ahead, play around, do what you want. I really don't care. There's nothing of value in there. But whenever they move into the next stage, we go through quite a stringent process of making sure our partners are who they say they are. We test their systems, we try to penetrate their systems, and we bring our expertise as a large financial institution with a lot of resources behind us and say, we're going to help your system become smarter, better, more secure.
Well said. Thank you. And Massimo, I think this is an interesting question for you, because when you think about what is the most sensitive data there is, well, my income tax form, we can all think of some public figures who don't want to actually tell us what's on their income taxes. So I personally trust Intuit with my tax information. Talk to me a little bit about that from that perspective, that you've already kind of gained that trust.
Yeah, so first of all, I think that what was said before around, there is actually a lot of effort in securing a lot of these APIs. From an Intuit perspective, of course, that actually is our mission number 0, right? We kind of live and kind of breathe our business in the trust of our users, and that actually is our first priority. Likely for us, we're mostly a consumer of APIs and not really a producer of API, in that most of our products aggregate data from multiple sources. And the main kind of, for example, for TurboTax, the main API that we actually consume are the IRS ones that hopefully actually are going to be secured as well. I think actually that in terms of API, the interesting question to ask is, the bad actors are really kind of interested in the financial APIs, right? And if a bad actor had access to an IRS API, as they managed to do recently, or Intuit or any actually major bank, that's very disruptive. And I think actually that the problem is that those guys are moving very fast. So to the innovation question, one area where the financial world has to really kind of get forward really fast is exactly about using AI for securing data and actually prevent attacks. And that's one area where at least my company is extremely involved. And I believe there is also like a generic kind of very collaborative environment, I would say, in the financial world around doing that, because we all recognize it's something actually that is a common problem and a common priority.
Well said, Massimo. Thank you. And Jake, what are your thoughts on this?
So for us, APIs are part of how banks respond to the innovation challenge, which is they put out APIs and get a marketplace of consumer companies or other companies to develop consumer-facing products built on their services. And we're kind of seeing that happen in Europe, led by PSD2, but as Dion mentioned, we're also seeing that happen in Asia, in North America, and elsewhere. Banks won't build all of the consumer banking experiences that you have, but they may be sitting there in the background. And in fact, you'll likely see different kind of models evolve. So for us, we definitely consume bank APIs. The more mature the bank API suite, the better. We look forward to seeing what happens in Europe come to other parts of the world. It's good to have really mature, secure sets of APIs. For us as a vendor, we go through this security piece with banks. We are a bank-grade platform, so we understand how to work in this environment. It is certainly different to building, doing something like this for retail or for a bus timetable. These are a different kind of client.
Well said, Jake. Thank you. I want to bounce off something you talked about, which is internal workings that necessarily we're talking a lot about. The stuff that the consumer is seeing. For instance, ATB's Facebook Messenger app. But tell me a little bit about how you're seeing financial institutions disrupt, or maybe how you're doing it in your own organization that's disrupting how you're doing business that maybe the consumers aren't seeing. And Jake, you have an interesting insight on this, being on the provider side. Have you seen anything interesting that you wanted to share?
You mean how are banks disrupting themselves?
Yeah, that's a good way to put it. Yeah, how are they disrupting themselves and their own bottom line?
Well, I think they bring people like Dan in and let them loose. And so I think often with banks, and I'm sure Dion can back this up, but you will have people who've been brought into the organization as change makers. Digital transformation is a big trend going through the industry. Banks are concerned that fundamentally a lot of their retail banking profits at least are at risk over the next 10 to 15 years. And so they are making changes. Now there's a super broad spectrum in terms of whether people are just talking about it to actually doing anything. Internally, that goes from labs to actually putting budget behind things and wanting to be first movers. For us, we look for banks like ATB who are positioning themselves as being a leader in the market, not a laggard. So a first adopter, that makes a big difference. There are people who are willing to try things out and test them and have a kind of process for doing that. So that's a big piece for us.
Thank you. Wonderful. And Dan, I know that you have insight on this because you've got super disruption happening on the customer-facing side. You got to be doing stuff on the back end.
So we do. So we have one of our mandates is tools for team members. So it's a way that we optimize our back end. We do actually have a proof of concept in that area, which is through artificial intelligence. One of the problems that we have is change is happening so rapidly. We've moved from a waterfall environment with quarterly releases to an agile environment where releases come within 2 to 4 weeks at about a 250 project portfolio at any given time. Our frontline staff is being pounded with information, and we don't know how to communicate it effectively. So one of the proof of concepts that we're running is we are running an artificial intelligence on the back end to be able to better articulate and answer the questions that our team members have. So listening to them, we're confused. We don't know what the answer is. This week it's this. Compliance changes every month with all the different compliance bodies we need to comply to. We don't know what the current compliance is every day. So how can we get that in front of them? And when you read reams of information, that's time that they don't spend listening to our customers. And we're paying them to listen to our customers.
Well said, well said. Dion, what are you seeing in terms of internal disruption?
Well, ATB does a fantastic job. They're a size of bank that's able to do that. Smaller players are able to be more nimble. I hate to say this, I see a lot of innovation theater, which is to say, hey, wouldn't it be cool if? And then they get back to their day job. And I don't say that derisively. When you run a major bank, when I was at Citibank, we had 4 times a year that we could touch the IT infrastructure, 4 times. And what you would do is you would do just like politics. You would attach your project to a compliance project so that it would go through unabated. But the problem was that was the only way to get anything into the IT timeframe. Now, the problem with that system is obvious. All the cool new stuff never hit that because when you're Citibank, as someone once said to me, if you touch one customer, you touch 1 million customers. If that's your attitude, it's going to be hard to innovate. But how do you ring fence smaller groups? How do you get things in a sandbox, as you described it, Dan? These are the things that, honestly, we see our customers struggle with. We host all the time. Big banks come to Silicon Valley, they get a big van, they take their wife to Napa for the weekend, they come back down, they visit, they get excited, they go visit Google, they say we should be more like Apple, then they fly home, and not a lot changes, right? And the reason that's disappointing is because the tools are there, the process is there, the pieces are there, but, and I don't mean this derisively, but when the board of directors of a bank is 63-year-old white guys, you're not going to see the innovation you need to see, right? It starts at the top. And I look, every time I visit with a customer, I say, let me look at their board of directors. And I'll steal a quote from a friend of mine, male, pale, and stale, every time. If that's the leadership, how are you going to change?
I really hope we see that trending on Twitter, that soundbite. If you haven't already, please tweet that.
Realize this is
Hashtag
my
MB
customers I'm
2017.
talking about, by the way, so make it anonymous if you
Said
want.
a gentleman in the FinTech panel. Thanks, Dion. And Dan was laughing like crazy. I think he's seen some of this, attach it to the compliance projects. It's kind of wily, actually. Massimo, anything else to add?
One thing actually, apart from the technological aspect per se, that of course is very exciting, I think actually one area where the new wave of AI actually can really kind of be disruptive in the next few years is on the experience side. Because we're actually applying those techniques actually allows to think actual experiences very differently. So one big example that probably is top of mind of everyone is conversational UIs and conversational interfaces. But actually, I would go actually beyond that. The ability to, for example, have a much better forecasting, a much better understanding of all the different data points that concern a particular users is getting into the into moving what you normally actually banks expose and kind of financial institution expose as just like this is your report, this is your kind of bank account statement, to a much more advisory mode where we're actually just saying, hey, we think actually you should do that. For example, in Intuit, we're starting doing that a little bit with taxes. That's a kind of very delicate problem. We're trying to give you suggestions about things that you can do about your taxes proactively. And I think actually this will go better and better. And what this is doing is that it's shifting a little bit the experience from just kind of a reactive things, I'm your calculator, I'm your statement provider, to I'm becoming your advisor. And the interesting thing there, in my opinion, again, I like to do the autonomous car example, is to what point you let your hands off the wheel and you kind of just follow the advice of the AI that may have been trained, may have a lot of points of correlations. And I think actually experiences have to change significantly in order to allow people to do that. And that's one area that I think actually is very transformative. And I think it's very ripe. I think it's going to happen because people need that. If you think about who needs advice today, are usually the people that can't afford it, the people that live paycheck by paycheck, or the small businesses that are struggling every day. They can't afford an accountant. We at Intuit have statistics around about 50% of businesses that do not get an accountant they fail. They fail 50% more than the ones that have an accountant, and they just can't afford it very often. And so, if we can automate that and democratize that kind of technology, that I think is going to be very disruptive.
Well said, Massimo. Massimo, I'm going to stick with you for a second. Talk to me a little bit about machine learning. You're our data scientist on the panel. What are you most excited about happening in this space?
So I've been doing machine learning and not in the financial world for a long time. As you probably are aware, actually, there is like just a revolution in it. And the things that have not been working literally for many, many decades are starting to work. To me, the very, very interesting aspect of it is the fact that we're doing machine learning on raw data. We don't have a lot of human beings in the middle. And this actually, there is a caveat about this because there's still actually a lot of hand tuning, and I'm hoping actually that will progress out of that. But the idea that we don't have people effectively putting their own bias and their own mental schemes on top of things is actually transforming it, because actually that was the bottleneck, and this is what we're figuring out actually with these new techniques. In the financial world particularly, I think the idea is that in Vision, for example, there is a very kind of well understood way in which you kind of build features, in which you build representation of the world that has not been working very well, but actually was there. But in a financial world, I mean, I don't have like a way to represent very well, for example, the financial well-being of people, or the need of a business for cash flow. And so the ability to deal with raw data allows me to actually attack those problems, even in absence of a lot of if you want, kind of necessary domain knowledge and kind of experience about it. And this actually has the potential to scale out application of machine learning enormously. So that's really exciting for me.
Well said, Massimo. Thank you. Jake, let's go jump to you. I'm jumping into the side of the panel. What's really exciting you about machine learning that's coming out?
So we spend a bunch of time with ML in two areas. The first is on NLP. So one of the big upsides of machine learning is that you can interact with your bank by talking to it the same way you talk to your friends. That's where we've spent most of our time to date, building a model through for banking. The second piece, to build on what Massimo said, is wouldn't some businesses, a bunch of businesses like a tax accountant for everybody else. So we think that everybody deserves a private banker in their pocket. And so that's the other big area where we're looking to apply ML and other AI techniques. We can build a behavior profile for individual customers. We can recommend tools to you. We can decide when and how those tools will interact with you based on the behavior of you and a whole bunch of other customers like you. So that becomes really deeply personalized. It's automating a whole bunch of things that you would otherwise spend time on. It's hitting you at the right time in the right channel. That's the goal of our platform, is to be a private banker for everybody.
Well said, Jake. Thank you. Now, Dan, you were showing me some cool machine learning on your phone earlier. Can you talk to me a little bit about that banking application coming up?
That's really exciting. So we really concentrate at ATB in listening to our customers. So what are our customers saying to us? And one of the things they said to us is, we want to bank on our terms where we're at. And that's certainly not in our banking app, because really, who goes there? The recent stats, 30%, 40% of your time on your phone is spent on Facebook? Anybody like that? I know I am. I'm a big Facebook.
I think it's higher now, actually.
Is it higher now?
Oh, as a culture, we're really changing.
That's good for us. In order to do that, in order to offer a personalized service to that experience with our customers, we needed to let something go at the bank. We needed to let go the ownership. We needed to let go of being in control of everything. Facebook is an amazing partner that has spent a lot of money and research on creating the best customer experience. That means that I don't need to spend a lot of money on that. And instead, we can overlay an AI on the back end and utilize their already pre-known interface on how they use it and create NL on the back end to make it customizable for an individual, so they know who you are, how you use the system, how you interact with it. And every day with Finn's help, it becomes smarter and smarter and smarter, so that in the end, you don't even have to go in our app and say, I'd like to pay my power bill. It'll just message you and say, guess what? We noticed it's the 1st and we paid your power bill for you. Or 2 days before, it's going to say, by the way, your power bill's coming out, you don't have enough money for it, and your paycheck's going to come out a week later. Do you want to do something? Maybe you want to do a microloan with us or something like that in order to help you through that little hump or hurdle. That's where it's going, and I'm really excited about the advancements that we're making to make it, again, something that our customers want to use and becomes seamless to their everyday environment, as opposed to being obtrusive, which is, I need to feel guilt by logging into my banking app, because we know if you don't have enough money, you feel guilt over that. Even if you have lots of money and you went out over the weekend, you feel guilt over that. We want to remove that from the equation and give it that personalized service. And again, affordably. We can never do that without an AI behind it. We can't have agents talking to every individual request.
I kind of love the warm and fuzzy feeling of the app, coming up and saying, hey, buddy, maybe you need a little loan to get you to your to keep your lights on. That's really I think you just put my mom in your app. That's really nice. Dion, what about you? What are you seeing coming up in the ML landscape?
Well, we work a lot with our clients on the artificial intelligence, machine learning, but a lot of it right now is RPA. It's just robotic process automation, which is to say there's a software application they use, and now a little robot inside pushes the button a bunch of times. I believe we're going to transition from that over. I think what's interesting about Dan's comments, and I see the potential. I also know at Christmas time, right before, my kids were coming to me saying, hey, Dad, that thing you ordered for me in blue on Amazon, I wanted it in red. Could you change that? Right? Because there was no privacy to it. So I think as we start to do these things, I think we're going to run into a privacy issue in our own homes as well as otherwise. And I think one of the things I think about is I always look at there's always these surveys. Millennials hate banks more than the dentist or whatever. Every time I offer a millennial $10,000, they're not going to run to Google with it. They're going to go to their bank with it, right? Banks, for all their foibles, still have a lot of trust. Now, the tricky part is as it gets more automated, they can't violate that trust by using bots and other things to automatically do what you might not want done or exposed, right? We all have transactions on our credit cards that we wouldn't want the world to know about, right? And I know when I was at First Data, we had a treasure trove of data that we could never access or use because it violated some privacy act or just common decency at some point. So I think we're coming into some very uncharted water, and smart people like Massimo, data scientists, are going to figure out how to get us there, and then we're going to need, hopefully not legal framework, but smart people to prevent us from violating our customers' trust. It's a balance. I'm excited, but there's a balance to it.
Well said. And now, guys, we have only about 11 minutes left in the session, so I wanted to open it up to the audience. I know that you have questions for Jake, Dan, Dion, and Massimo. Who has a question? I can get the microphone over to you. I'm in Oprah mode now.
Thank you. So you talked about AI a lot, and I know it's not the topic of the conference, but I'd like to hear your opinion about how blockchain is disrupting the fintech industry.
So interestingly enough, I own blockchain go-to-market for CapGemini, and it's early days, more so than AI. AI had this 20-year trajectory of overnight success that we're now enjoying. Blockchain is more like an overnight success, and we've spoken to a lot of customers, and what I would say is this. If there is a need for a trustless transaction and you need an immutable audit trail, it's a great application. But it does have a latency today that is not normal for other transactions. So I would look for it in B2B banking, not in B2C banking. So that's where we're looking at it. Trade finance, cross-border, letters of credit, those kind of things.
Anyone else? Anyone else have anything else to add?
Just one thing to add, that I think actually, even if this is about fintech, I think the interesting thing about blockchain is also application beyond finance and beyond just currency and bank transactions. I think actually we need to keep an eye on that.
Excellent.
So I can speak to that. We did, I believe, the first international money movement on blockchain. That was about 10 months ago. But the technology's new, and honestly, it's going to take a long time to get there. We're working on Know Your Customer through blockchain. Again, that's a big hurdle that all the banks are struggling with. How do we do this? How do we onboard customers in a way that we know that we're going to be confident in who they are without the current cumbersome processes? But you're going to see smaller, maybe contract blockchains, things that need to have that historical record of ownership through it to start off with first. But I would say viable, practical reasons, maybe a couple of years before you see something of that scale.
Yeah, hi, my name is Ashwin. I have two questions. First, for the consumer banking, if you are doing anything through Facebook Messenger, then all of your messages are going to be parsed by Facebook, such as when your payments are coming up and so on. So there is a lot of concern of security in that regard. So if you can address that. And second is that we deal with private bankers or private banking and wealth management. So they constantly tell us that there is no need for all these chatbots, etc., because they have a private human banker assigned to their customers. So what's your take on private banking and new AI things?
Maybe I can jump in quickly on a couple of those things. So one, wouldn't it be great if everybody else had a private banker? Two, I bet you there's a lot of routine, mechanical, mundane stuff that those private bankers are doing, and we could automate all of that. In the background, the private banker can still give their client up and give them a call. So even where the client is interacting with the private banker as their user interface, instead of interacting with a virtual assistant, that doesn't mean that a bot or an assistant, an AI in the background can't be doing most of the work. When it comes to Facebook Messenger, Alexa, Google Assistant, SMS, or any other channel, there are certainly things you need to look at when you're looking at privacy and risk in those channels. In Messenger, there's ways to display information where it's not going through a public messenger channel. But by the same token, a lot of the information that goes through is public, and so you need to work through with your compliance and risk team and figure it out. So that's something we spent, and maybe you can jump in on this, but something we spent a whole bunch of time working on, I know.
So, we gave that a lot of thought. Compliance, making sure that our customers' data is secure is really important to us. We've accepted that, unlike some of the larger banks, not everybody will use it. The people who will use it, the banking information that's presented on there's no account numbers, no credit card numbers, is minuscule compared to the amount of personal information they have on there. Really, it's nonsense stuff. Great, so you paid your bill $40. That's not going to tell them if an employee at Facebook potentially hacked in, potentially breached their code of conduct, potentially walked away with some information. Is it going to be this that they're interested in, or is it going to be your birthdays with your mother's maiden name to do an account takeover? So it's accepting that the people who are going to bank on Facebook, and it's not going to be everybody, are going to be the people who are already comfortable with the amount of information they have on Facebook. And that was a key thing to explain to our risk people, is that that's okay. It's not going to be this person who holds up, we had this person one point in time who found out that if you held the envelope that you got the PIN numbers in for your card to a light in a dark room to really close, and it was a certain wattage that you could see it, those people wouldn't be on Facebook Messenger. So that's how we got around that. The second question was, private banking is great if you have money. That's fantastic. But people need to start somewhere, and that somewhere may be with $100, and maybe with $10. Why are we not giving those people the same level of customer service to the people who have more money? Why are we giving better service to people who are rich instead of everybody? We can't financially do that because it doesn't make sense unless we bring AIs, unless we bring bots. We can now bring that type of personalization and help people with lower incomes become in a better situation. And that's why you need to have it. Absolutely. But there's a huge market segment which are going to be moving from where they are to affluent. Is it better to catch them now, or is it better to catch them after you've lost them? And I'd much rather catch them now and help them get there.
Just one very quick add. So I'm totally agree with the idea of virtual agents and AI actually democratizing the idea of advisory. But there is also another aspect that we have to keep in mind, and that's the power and accuracy of AIs that, at least in perspective, you can get. I don't know how many of you know how many pages of tax code are there today in the United States. It's about 85,000. Now, what is the probability that your CPA has seen all of them every year with all the changes that happen? It's impossible. And this applies actually to accounting, to a lot of other areas. The idea of using machines that actually can parse all that information will probably also optimize things for people and make their life much better by actually producing better decisions and better advice than a human being would do. Now, I agree that you would actually probably integrate with a human being, at least in a transitional phase. But I see this a little bit as, what happened with arithmetics. I don't know if you've seen actually the movie Hidden Figures when they had the human computers. I mean, today it's unimaginable for somebody to do a computer as a job. And I have a sense that at least for the lower level of accounting and tax preparation, that will be the future in the long term.
Well said, Massimo. Any other questions? I think we have time maybe for two.
Great. Thank you. Hi, this question is a mix between ML and business policy. So ML is heavily dependent on your training data. So if you power your business interactions with ML trained from, let's call it a biased data set, or rather the current data set, you'll be pushing more people to be more like the current people, essentially. And sometimes if it's 5% people are saving, you may want to push them to 8%, 9% of savings. But all your strategies built on ML will drive people towards the 5% mark. So can you talk a little bit about sort of the impact of your ML trained advisors that might be moving them towards more of the mainstream behavior versus what you really want them to? Thanks.
So very quickly, because that's a very long discussion, but that's what I meant actually before in terms of the financial world has challenges. And what you mentioned is the biasing. There is also the other part that is there are constraints, right? There are laws. Like I cannot actually sort of suggest you that because you'll go to prison if you do that, right? And sometimes ML actually may make you that suggestion because it's a probabilistic technique. So there are things that you have to adapt to. The problem of biasing, there are various techniques that we can use, but the main interesting things that are coming up in the literature right now is the ability of some of the new machine learning techniques to generalize and produce reasoning on top of just inference. Because a lot of the ML that we have in mind that we use in data science is mostly inference. But some of the techniques that are coming up that we're actually starting to adopt is actually more about reasoning and kind of combining logical reasonings and combinations of well-known facts, what we call knowledge graphs, with the ability to do inference on top of them. And that actually is becoming really, really powerful to overcome both the biasing problem and the constraint problem when you have to deal with legislations and compliance.
Well
Yeah,
said.
it's a little bit like on when you have songs or any of these music apps, you notice you're suddenly listening to the same 20 songs. There's a reason for that, because you like the first 5. What it doesn't allow you to do is expand your horizons. And to your point, there is a human concern about this that I don't know that machines have figured out yet, because machines have a bias built into them automatically, as do data sets, to your point. So I think it's something we as an industry, we as all fintech or bankers or whoever have to be aware of, not to push our customers into a cul-de-sac where they're just stuck with a limited set of choice because they drove themselves down the cul-de-sac.
Well said. Thank you. And we have time for one question.
This is for the ATB and the Fin guys. Now that you've had your new apps running for a while, the conversational apps and so on, what are the things that people are finding really useful beyond what could be done by email before, which is notify you on, you use a credit card to do some transaction? That's been around for a while. Is there something beyond that that people think, that's really good, I'm going to use this going forward?
I'll jump on this one first. So we focused for initial launch on core everyday banking. So that includes paying bills, paying friends, transferring money, seeing your transaction balances, finding ATMs, finding product information, chatting to customer care through a mix of humans and AI. We also have a spending insight assistant there, so you can ask, how much did I spend on hotels last month? Or how much did I spend on Starbucks in the last few weeks? And we'll give you an answer. One of the big benefits versus going through a GUI interface or going through a standard app interface is you could get in and say, pay my water bill $30. That's takes you a lot longer to do that in your app. Also, something you could say to Google Assistant, as an example. So, and the key thing there is once we have that foundational layer, which we already do now, we can start to add in things like checking that you have enough money in your account before you pay a bill, because we can figure out when your big bills are due. Sending you a reminder every time you have a big bill that's due. Setting you up for automated savings, because we know when you get paid, we know how much cash flow you're likely to have at the end of it. So that foundational layer now lets us provide this smart assistant for you that's personalized for you, that helps you optimize your free cash flow, which is a lot of what that assistant's there to do.
Dan, anything else to add?
I think a lot of what you're talking about is aspirational. What I was more interested in is first feedback from the consumers in terms of what they really like versus what you as a developer is pushing to them.
I can answer that. The number one feature that they like in our new Facebook bot is that it's in an always-on state and they don't have to authenticate. That is the number one thing they like. We have coined a term called friendly money movement, things that are known to the customer, that is traceable through on the Canadian banking network. So we've identified that the risk of that is very low. If someone steals it and transfers money into their bank account, we know where they live because somebody knows their address. So we said, let's leave it in an always-on state, and our customers love that.
I would love that too. And I'm unfortunately at a friendly session movement state. We are out of time. So I want to have a big round of applause to Massimo Mascaro, Dion Lisle, Dan Stern, Jake Tyler, who were able to, unload a ton of knowledge on us. Thank you so much. And there's stuff coming up later in the afternoon, so see you there.